Ever wondered how Bitcoin can be flying high one minute and then suddenly crash in just a few hours? It's a gut-wrenching experience, but understanding why it happens can make you a much smarter investor. Today, we're diving into the 5 shocking reasons behind these dramatic price drops. Trust me, you need to know these. First up, the whales. No, not the ocean giants, but massive Bitcoin holders. We're talking about wallets with thousands of Bitcoin. When just a few of these whales decide to sell off a huge chunk of their holdings, it floods the market. This sudden increase in supply sends the price plummeting. What happens next? Retail investors, like you and me, see the price drop, panic, and start selling too. It creates a snowball effect, turning a small dip into a massive crash. It is a classic case of the big players making waves and the small fish getting caught in the current. Reason number 2. Negative news. The crypto market is incredibly sensitive to news and headlines. Think about it. A rumor about a major country banning Bitcoin, news of a massive exchange hack, or even a delay in a much-anticipated Bitcoin ETF can send shockwaves through the market. This is what we call FUD, fear, uncertainty, and doubt. Bad news spreads like wildfire on social media and in news outlets, causing a wave of panic selling. Investors rush to get their money out before things get worse, and boom, the price collapses. It's amazing how a single headline can wipe billions off the market in an instant. Now for our third reason, and this one's a bit more technical, the overheated derivatives market. Many traders don't buy Bitcoin directly. They use leverage to bet on its future price through contracts like futures and perpetual swaps. When everyone is bullish and taking on massive long positions with borrowed money, the market becomes extremely fragile. A small dip in price can trigger a cascade of liquidations. This means the exchanges automatically close these leveraged positions to cover the losses, which involves selling Bitcoin. This selling pressure pushes the price down even further, triggering more liquidations. It's a brutal domino effect that can vaporize gains in minutes. The fourth reason is pure, raw human psychology. FOMO and FUD. FOMO, the fear of missing out, drives prices up to unsustainable levels. Everyone wants in on the action, but what goes up on hype must come down. The flip side is food, which we touched on earlier. Fear spreads even faster than greed. A single bad rumor, a technical glitch, or a tweet from an influential figure can be enough to start a panic. In a market that operates 24/7 with no circuit breakers, this fear can lead to a mad dash for the exit. Everyone tries to sell at once, but there aren't enough buyers, causing the price to nosedive. It's a powerful reminder that markets are driven by human emotions, not just logic. Finally, we have market cycles. This is a broader, more natural reason. Bitcoin, like any other asset, moves in cycles. There are periods of massive price pumps, often driven by hype and new adoption. These are followed by inevitable corrections, where the price pulls back significantly. After the correction, there's a period of accumulation, where smart money starts buying in again at lower prices, setting the stage for the next bull run. So, what looks like a sudden, terrifying crash can sometimes just be a natural part of a larger market cycle. Understanding these phases can help you keep a cool head when everyone else is panicking. It's the rhythm of the market. So there you have it. 5 key reasons why Bitcoin can experience those heart-stopping crashes. From whale manipulation and negative news to leveraged liquidations, mass psychology, and natural market cycles. Knowing these forces are at play is the first step to navigating this volatile landscape. Now, I want to hear from you. Have you ever been caught in a major Bitcoin dump? Which of these reasons do you think is the most powerful or dangerous driver of a crash? Let me know your thoughts and experiences in the comments below. If you found this breakdown helpful, make sure to hit that like button and subscribe for more deep dives into the world of crypto. Thanks for watching, and I'll see you in the next one.